So passed the criteria, identified the contract, looked at what our promises are. Now we're looking at the transaction price. Remember, we put in the amount that we're expected to be entitled to. Don't include anything going to a third party, and always use the most likely amount. The next thing I want us to look at is if it's a variable consideration, i.e. it depends on something happening, then we can only include it if it's highly probable there will be no significant reversal. Highly probable that that revenue won't have to be reversed. Let me show you an example. So, £100 per unit we're making a sale. But we're going to give a £20 discount if they order more than 75, if our customer orders more than 75. Initially, we don't think the order will be over 75. So here we have a variable consideration because it varies with how much how many they buy. So can we bring it in at 100, or do we think there's going to be a significant reversal of that 100? Well, we can recognise 100. Why? Because it says initially we don't think the customer will order more than 75. So we think that 100 will be fine. So we think there's a high probability that a significant revenue reversal will not occur when we bring it in at 100 because we think they're going to order less than 75. What about here though? Same thing again. However, this time, later on, we see that the customer is buying more than 75 now. Or it looks like they're going to be buying more than 75 at least. So can we still bring in 100? No, we can't, because we think that there's going to be a significant reversal of that 100, because we think that they're going to order more than 75. So therefore, the only amount that we can put in, which is not going to have a significant reversal, is that 80. Okay, because at the 100 level, we think there would be a significant reversal because they're going to order more than 75.